And it's not like you might be a low interest loan, but I haven't checked on the covenants associated with the IRS, but I suspect that they could come and say, pay today or you're out of business tomorrow.
Hey everyone, welcome to our latest Trade to Black podcast. Hope you're having a good week to your week so far. I'm your host, Shad Dales. Time to jump into today's podcast. A familiar name and a big name, obviously, in the cannabis space as we look at earnings season, some of the big takeaways. Yes, we've talked about that already, but we want to talk about Canopy, and there's no other better person to figure out what he thinks of the company and where it's going to be going. Is an advisor of Red Light Holland, the founder of Canopy Growth and chair counsel of the federal cannabis regulations. Bruce Linton, back to the podcast. Good to see you. How are you?
I'm just smiling, thinking maybe we got to just go with CFCR.
CFCR?
That thing I chair. Way easier for Shale. And it's all Shad. It's all about Shad. We got to make it easy for Shad.
Was that a big introduction, like as far as the title? Was that, should I mention of 3 or 4 other names or roles?
Yeah, I know. Isn't it hilarious? What did you used to do?
What did I used to do?
No, what did I used to do?
Yeah, exactly.
Yeah. No, interesting earning stuff. When you see some of these things, like, I don't know about you guys, like, I kind of like a couple that are growing.
Yeah.
I don't care if your growth is a result of combinations of other companies, if it's done on a creative basis, but actually increasing year over year isn't that common yet in a lot of these places. In fact, it's very uncommon. You start to see companies like TerraSend, you go, oh, balance sheet, pretty good.
Yeah.
Actual growth. And as far as I can tell, they don't appear to believe that the IRS is their lender and therefore we're not paying any taxes.
Mm-hmm.
Correct. I think that's the slippery slope the companies are doing with holding back their taxes and essentially using it as a low interest loan due to the penalties, which is going to catch up with them sooner or later.
Well, and the question really is, who is the them? The them, I suspect, are the officers and directors who are allowing that to occur.
Yes.
I don't know, when you get north of 50, 60 million, 70 million, 100 million that you owe to probably the most aggressive government entity on the planet responsible for taxation and collection, I wouldn't feel super comfortable being a director and officer in that scenario.
Right.
No. It was funny because Kim Rivers actually on the Trulieve earnings call just kept saying, and we pay our taxes on time. And we pay our taxes on time. Because other companies, all the analysts were like, well, you've got the tax deferred payment on your balance sheet still. Like, it's sitting there as a liability. You could put it against the cash, and you guys actually don't have a very good cash position. Like, how is this going to get addressed long term?
Yeah, and it's not like you might be a low interest loan, but I haven't checked on the covenants associated with the IRS, but I suspect that they could come and say, pay today or you're out of business tomorrow.
They can. What I've heard is if it gets long in the tooth, like talking 12 to 18 months, then they start to be like, hey guys, like knock, knock. But if it's within 12 months and you are regularly paying, they kind of turn a blind eye to an extent. But you get to the sums that you just mentioned, I mean, 50, 60, 70, 80 million. That starts to be like, hey, so come and pay us. We need our money.
No, so I like the growthy couple that there are. I like ones that have paid their taxes and show a balance sheet that you can actually know that you can manage. Because, if your use of proceeds on a fundraiser to pay the IRS, I don't imagine that's going to go super well as a fundraiser.
No.
We just got to pay our taxes. Could we, maybe it's like a 5% discount to the 5-day VWAP on this offer? I don't think that's happening.
No.
Yeah.
Well, so I like those. You know what I also like are the ones that every state's hot and exciting when it starts, or it's a mess like New York. But I like when people get in and all of a sudden they show 1 or 2 times in a row they emerge as a leader in a new market.
Yes. Yeah.
Right. Like you can say, oh, well, I did really good in XYZ state, but they maybe had some incumbent early advantages and then they can't show it again later.
Yep.
Where we're starting to see execution, meaning bringing the brands, bringing the products, putting up the stores, running it like keep the trains on time kind of thing.
Yeah. I mean, with yesterday's announcement, I'm curious to see what Planet 13 does coming into Florida with the VitaCan acquisition. I think they're getting 26 stores in the state, which now they've got $100 million invested in Florida alone. But I mean, I looked at it first because I mean, they bought the duplicative license from the Harvest acquisition, just a piece of paper for I think $55 million, and they paid $50 million yesterday for a vertically integrated company. So now they've got to offtake one of those licenses because you can't hold 2 in Florida. But I think they're gonna become a formidable player in the space, and they're betting on rec in this market.
Yeah. No, and then they cut their teeth in a smart way where they really learned how to be a venue, a brand.
Yes.
I don't know if it's still quite the same tick, but you couldn't really say you went to Vegas in the last several years if you didn't actually go to the planet.
Oh, it's genius. It's a spectacle. You
Yeah.
have to go. I mean,
Were you
everybody
at-
goes.
Were you at that poker event last year at MJ Biz at Planet
No.
13? I thought for sure saw you there.
No, I'm me and poker aren't very well acquainted. I'm maybe stick to blackjack. I'm not sophisticated enough to be good at poker.
I just couldn't believe the size of this dispensary. It was a shopping mall.
Oh,
It's a
yeah.
Costco. It's like if you wrote a movie plot of a cannabis superstore that was like analogous to like a Costco, it's Planet 13.
Yeah.
Like you walk in, the employees are just beaming smiles. There's just brands everywhere, bright lights. It's a spectacle.
Yeah.
But it
What-
works.
Yeah, I stopped by and saw the guys when they were basically in construction still. And they were talking about what they're going to do. And then I come back a few years later and they've done it. You know, it's gone from like a really crappy, I think it was like a beer warehouse is what the original use of that building was, to a phenomenal club-like superstore.
Yeah.
Was it a beer store? I thought it was a
Not a beer store. I think it was like
gentleman's club.
well, it may have been over the years, but there was a portion when you come in off to the left, which was like where they used to just freight forward beer.
Oh yeah. Where you mean where they have like the coffee shops and everything where you
Yeah,
walk
yeah,
in?
yeah.
Yeah. That makes
So
sense.
we took a deep dive into this earnings season. It's funny you brought up Terracin. We thought definitely they were the winners of the overall earnings season. Bright future that Jason's done an incredible job. Ziad, we interviewed a couple weeks ago. That guy knows how to execute. That's for sure. When I look at his background in Walgreens and how many pharmacies he was able to scale up, operate, and clearly those two connecting, it appears that they've really watch everything that they spend and are in a viable position, obviously now with the TSX listing. But outside of Terracin, was there anything else that really, positive or negative grabbed your attention?
I like to see GTI. It looks like they paid down some of their gov debt.
Yeah.
They look like they're in but they're they shrink 2% or something.
Was it?
I think they grew, but it was
2%.
0.6. It was 0.6%.
But
Pretty
like
much
the
flat,
cash
yeah.
things managed, and it sounds like they're actually going to be building out some more stores. Like they're now looking at the opportunity to be bigger and better.
Yeah.
Yeah.
Versus, I thought a lot of the discussion was generally around we're okay.
Yeah.
We're not. You know what I mean? And so those would be my two kind of pickup ones. I guess I was a little surprised with, and I didn't spend enough time on it, but I think Cresco's capital situation was less positive than I was expecting.
Yeah.
Yeah, their cash is a little light, and the debt's becoming a little bit of a concern. I mean, they were the darling. They were the darling of the space years back, and now it's kind of like they're not even mentioned in the tier one conversations
I know.
when you're talking. But they did keep pole position in it was I think it was Massachusetts, Illinois, and then another one of their major markets. They've still got number one market share in, which I mean, even with the price compression in Illinois, it's pretty impressive that they could maintain it. Because the sunny sides don't do anything in Florida. They don't perform well.
Well, full disclosure, they're a client of ours, but I'm still impressed with the,
Cresco?
No, MariMed. I like what they're doing.
Yeah.
Looking
But to be totally transparent, I'm looking at these in a much lighter way than you guys are. I'm more out of instead of doom scrolling on the news or something, I tend to go to that section, which gives me something to read, which has content I can determine what my perspective is.
Yeah, 100%.
But it's more of it's a way to go and look at it. And even, to shift to your other stuff, like the Canopy deal, getting 50 plus million cash into the company is a positive.
Yeah.
The fact they have $1 billion in debt ish, or at least I think a net debt of 500 or 600 million makes the 50 feel a little bit lighter, but it's still a good thing. But my principal excitement about that was the best thing for Smiths Falls was if Canopy was going to continue to produce and create and dominate, which obviously they're not.
Right.
The second best news is the return of a former town-making brand. Come to Smiths Falls, have a tourism. And it's not just the jobs that Canopy had or would have had or could have kept were much more diverse.
Yeah.
Right? Like this is a factory making chocolate, which has a visitor center. Probably it is not likely going to be the place where they invent everything that's next and new. Mm-hmm. And so, you're going to give stable employment to the town. They'll end up with hundreds of jobs, I'm sure. And for Hershey, the building that I acquired was end of life. It was on a 40-acre parcel of land. It was about 500,000 square feet of space, but every roof was leaking. The fire suppression systems weren't to the current state of expectation by regulators. So everything now is returned to or better than anything they would have had, and the footprint is actually increased by a couple 100,000 square feet.
Interesting.
And so what they're going to have is, if you're Hershey, you paid 50 for something worth 200 or more, and you sold it 10 years earlier for about 10 million.
Right.
And so
you think this is a win situation for Hershey and for Canopy?
Well, yeah. And, I think if Canopy can maintain at least some market share, it's kind of a cool story. Like, there's a visitor center that's terrific at what is now the Hershey place.
Right.
I hope they open it up. And what would be ideal is if there was some kind of thing across the street where Tweed/Canopy is, that could also have a visitor view. You can have a store if they wanted. But like, if you start building a brand back again, it is kind of fun to be in the cycle where Hershey's returning and Canopy might be able to collaborate at least across the street, have a double win.
Cool. That'd be really cool.
Because then, what happens is you're in a conversation.
Well, it's an era that people are going to be talking about forever, a long time. We will never forget that, right?
And so you want to make sure, if you're trying to get back to market share, like their market share is so low in Canada now, the amount of cannabis they're selling, I think, is, I don't know, what, a third of what was the peak amount they sold?
Mm-hmm.
Yeah. You got to get growth. Like, you can't keep cutting shit fast enough to keep up with declining sales.
Yeah.
The reason I said I like growth companies when I looked at the MSOs, the solution to most problems in business is increasing the rate at which you grow, not increasing the rate at which you cut off your arms and legs.
Yeah. Where do you think they go from here?
Yeah.
Like, it's because that's honestly the biggest question in the space. As far as I'm concerned, I mean, obviously, like, I consider you kind of like the godfather of this industry. I mean, Canopy was Canopy. Like, the $5 billion investment from Constellation, that set the pace for everything else. And now we're sitting looking at Canopy today. And I mean, it's just like, where does Canopy go from here? As far as I'm concerned, it's probably one of the best risk rewards in the space, just with the pedigree, the Constellation relationship, and where the company can go going into the future.
Yeah. Yes and no. So yes, on the points you said. The only reason I'm a little reluctant is they have a special shareholders meeting, I think, sometime in September. Okay. And what they're asking is to have the consolidation of the U.S. assets into an entity that's controlled. But because of the pushback by regulators, as far as I can tell, what it is it's acquisition, and then those things become a board of two people. As far as I can tell, the board is maybe like Acreage will become a board of like two people.
Yeah.
And that entity then appears to me to be well positioned as a standalone thing, which would say, if you were trying to take a alternate view on things, maybe that thing in the US is separate and clear now. And if Canopy went under in Canada, if what people really wanted was the US stuff, which would be more valuable right now, in my opinion, than the value that's ascribed to Canopy, except for the $1 billion in debt.
Right.
Yeah. Yeah.
So you may be just like, maybe these things create optionality in the event of insolvency.
That's why I've been hesitant. That's
why, like, when people say, well, it's got to be near the bottom, I said, no, the bottom's that's when it hits bottom, because you hear that thud sound.
Yeah.
That's the bottom.
Yeah.
And so I'm only reluctant, and I don't have a position of any. I keep a few stocks, so I get all the pieces of mail. But I keep looking at that transaction, because remember, the reason they wanted to do it was so that on a consolidated basis, they could reflect all of the revenues and expenses in a consolidated basis to show what you really have value and ownership in. But then NASDAQ said, no, you're not consolidating this stuff and reporting it that way. So I don't know why they couldn't just not do this vote and just keep everything as a pro forma.
Right.
That would have made the most sense.
And I've said it before, like, if you announce that we're going to do something, but we're not yet approved by NASDAQ, until you're approved by NASDAQ, I don't know how you could ever raise a penny. Because if you go to someone and say, hey, I'd like to sell you some equities, but I can't tell you for sure if in the future I'm even going to be on a U.S. listing. I don't know how that conversation ends anywhere other than really quickly.
So if we look at look, everything's got to happen reform-wise in the U.S. Do they have enough time? Like it's almost like a race against time for this company right now, is it not?
Yeah. I, it's a race against time in the sense that time is attached to an obligation to service debt.
Right.
If you could get rid of the debt aspect of that equation, the race really then is about optimizing products, thinking about geographies, moving on things in that regard.
Okay.
I think their race is principally against whatever the $1 billion. I know the can got kicked.
Yeah.
And it's not different for Canopy than a lot of places. The difference only might be the quantum of the debt, but there's other folks with $1 billion in debt.
Yeah.
And the decreasing revenue line, because a lot of the other MSO type players with a big debt position, like Boris has got a big debt number, but he's got a big revenue number.
Yeah.
He's got growth catalysts. He's got growth
Right.
catalysts and adult use markets coming online potentially.
Right. So like
that'll fly.
Yeah. Do you want to have a position where they have $1 billion in debt, but they have $1 billion in revenues and they're growing?
Yeah.
Big difference.
Yeah. So I don't know. Like, if you wanted to be super radical, what you might want to say is, screw it. We're dropping off a NASDAQ. We're going TSX only, and we're going full blast into America.
I've thought about that.
Listen,
So if you went that route, what would that do? Educate.
Well, that's the route I was going to go. Once you have $5 billion in the bank, you don't really need to hang out on an exchange. You need to go dominate the shit out of markets.
Correct.
And so what you do is you use your balance sheet at that time, drop an exchange, put Constellation into what they finally agreed to be now, which is an exchangeable share.
Right.
And then you go and mop up a bunch of markets because you got cash on the balance sheets, others don't. Now that move is still possible, but the balance sheet isn't the battle-winning balance sheet.
Yeah, it's crazy to think what that capital could do right now with the current state of the space. I mean, they could do some
100%.
serious damage and consolidation in the U.S.
They
very quickly.
desperately need it.
But I think you have Kim coming up next, and I got to get on the road sometime soon. You kicked off with an advisor to Red Light Holland. Still talk to Todd regularly.
Do you?
You know, I think that they're being probably pretty responsible, like likely more responsible than I am with their capital.
Okay.
You know what I mean? They're careful with it. He's generating some growth, right? And I like. Oh, by the way, Shad, I liked your little shout out to Todd. You put something online.
Yeah, that did
The fact that you guys kind of started similar backgrounds,
Yeah.
similar times.
Yeah.
And I think you both have massively evolved and advanced.
Yeah, that LinkedIn posted very, very well, but it was more or less in a nutshell about how when I first got started being in mainstream media, just the relationship I had with Todd. And yeah, I got to give him credit because I was just like, how's a morning show host supposed to be a CEO of a publicly traded company? But I have to give him credit. He has learned a lot.
Yeah.
Because he's been CEO now for what, 3 years?
Yeah, more than that, I think. But and he wants it to work out well.
Yeah.
There's a certain point in time, like my urging have been, you have cash. The principal value of your company right now is basically equal to the cash.
Yep.
So therefore, logically, if the cash is decreased over time, the value of your corporation is decreased over time.
Yeah.
So what you have to do is accept that and act.
Hmm.
And either you start buying things that are going to increase your revenue more rapidly using stock and keeping your cash because these things become accretive and you can get a big enough revenue line to cover everything. Or somebody will come and buy you. Right now, $1 of cash for a lot of these companies is worth what? Somewhere between $2 and $5 of equity value.
Yeah.
Because they can't get cash.
It's a good return.
Yeah. So it's a good return as long as the party that buys you has liquidity and you want their paper.
Yep.
Because there's a lot of people with paper that you don't want.
No.
And so
in the psychedelic space, definitely.
Well, and I don't care anywhere. Like right now, that cash could be as valuable to someone who's in the AI, pick it. You know, all these places had their day. Like AI was what, a 5-minute ripper. Everything was amazing, and then it's gone. Now a bunch of these guys, crypto, I don't know, pick it. But there are places that could have outsized returns that would value cash at $2 to $5 per dollar of cash in share equity.
Kathy Wood saying it'll be a $25 trillion industry, the crypto industry, by the year 2030. She was saying recently, and Bitcoin will be half of that. So
but I just throw it out there because when I talk to Todd, I don't really talk about like, how do you grow mushrooms and stuff? Because I don't know how you grow mushrooms really.
Yeah.
And I don't really actually want to know. Like I get the spores thing, blah, blah, blah. And I've tried the kit and they're kind of cool and the things pop out the side and you fry them up.
Yep.
But when I talk to them, it's more about like the value of your company is correlated almost directly with the sum of your cash. So you need to keep that in your mind as you give yourself quarterly review windows to say, have I thought of and made a move that creates equity value above that?
Yeah.
And you should be able to jump that because, he's trading, depends when he's trading, but when he's at 7, 8 cents, 4 cents, 6 cents, the cash and that valuation aren't super different.
Yeah.
Well, did you see the news yesterday with Simon acquiring small pharma?
No, I thought you were going to tell me that they are to cash.
No, they acquired small pharma in an all stock deal, pretty much an all stock deal for about 32 million, which when you talk about an equity investment, I mean, they've raised about 63 million in equity into small pharma and they just sold the entire boat for about half that. But on a go forward basis, they're going to be about 25% of the cap stack in Cybin.
Yeah.
So, I mean, if you've got faith in the forward momentum of Cybin, I mean, the small pharma shareholders are sitting pretty if they can execute moving forward.
A lot better situation what they were 2 days ago.
Yeah, I didn't see that deal, but it sounds like people got their ego out of the way so they could make a transaction that protected shareholder value.
Yeah.
Yep.
So to confirm, you are still very much involved in Red Light Holland.
Yeah, in fact, I'm driving to Toronto today, and you've inspired me. I'm going to give. I usually try to call Todd on WhatsApp on sort of like later in the week, but today's earlier in the week. I'll give him a call today just to say I haven't talked to him to say that I actually thought it was a good shout out from you in the LinkedIn post because I have observed in Todd his comprehension and discussion about the company's capital structure no longer sounds like you're discussing. Personal finance and corporate finance are totally different. Yeah. Both in the language and the words used and in the logic. And I find he fully gets it.
So last bold question, does Canopy make it?
Time horizon, I think they're going to be fine at least until about next June, because I think that's when they kick the can till.
Yeah.
And what's her name? The BMO analyst, Chen, she basically said, this isn't a question of whether or not they can continue tomorrow. Of course, they have to start selling more. Yeah. And I think Dave, the guy that's taken over Canada, is going to do that. But it's how do you get enough cash sometime to deal with the obligation that is not going away?
Yeah. 100%. Time will
and
tell.
I don't think you're going to find people holding $1 billion want to convert to equity.
Yeah.
No, not unless Constellation wants to come in with another $1 billion. That's the only person on the earth that would probably do that deal.
And I don't see that happening, or am I wrong, Bruce?
Well, I don't see it happening. Like this conversion, they're changing. They were pretty focused when I was doing the deal that they had control of the board, and this September meeting takes them entirely off the board.
What was it about them?
Constellation?
Yeah, because they can't control the company through the board if they have these convertible shares, from what I understand. And so I think the Canopy board is being reconstituted, as I understand it. And I don't talk to management, obviously. Reconstituted after this shareholder meeting, to reflect the fact that Constellation no longer has effectively total control of the board.
Wow. Can I ask you something? Like when you met with them back 5 years ago, and I know we've asked this question before, like, how did you get them to sign a check for $5 billion? Like, what was like, were you thinking you wanted them to sign a check of that size? Were you surprised when they actually presented the amount to you?
Well, so remember, they first put in
$250
or $500 million.
Right.
So there was this chunk in and an option for another chunk. And then they had a board observer seat for a year and got to be very close to the company. And so that year was an interesting one because Trudeau gets elected with majority, promises to have rec. Yeah. And now the drum roll, this is now your company. You're ready inside this thing. And there's an event going to occur in October, which is the launch of a globally potential transformative policy change that could take over the world. And you have the inside track on it. So when they're looking at it, their question with us really is, are we going to go bigger with you guys, or do we have to get someone else to go bigger with?
That was their take.
Well, as far as I could tell, because I think this was such a captivating time, right? And there was a lot of compression on the get going now.
When was it? Fall 2019? It went full wreck in Canada?
No, 18.
No, 18 September
18?
2018.
So you
Yes.
got
So
that
and the deal was announced in
August, right?
August of
2018?
2018.
Yeah.
And so, and it took effect November 1 was when the cash came in. And so there were like, if you're in the business of making people relax, have fun, go out, and that's called alcohol, but you can see that there's an alternate product that could catch on rapidly. And you don't want to go back in your rankings. You want to jump ahead of some of the other guys. This was a smart and prudent move. The biggest things that changed was the US still has done nothing. We had 2 or more years of COVID.
Yeah.
Medical went off the rails in Europe during COVID and is starting to come back now. Australia is actually growing and doing terrific.
Yeah.
But, you know, all these things happen. But I think...
like, do you look back and think, how on earth did they spend this much money?
I look back and go, I don't know exactly how much was in the bank the day I was gone, but it was like 8 months after the 5 billion came in. So I'm going to guess there's more than 4 billion left in the bank. Yeah, 4 billion is quite a bit of money to get through.
It's a lot of money.
It's a lot of money.
It's a lot. Yeah.
Listen, always appreciate the update, the time. Let's keep in touch. Tell Todd we say hi. How long are you in Toronto for?
Oh, I get to help move one of my kids, so that's probably a 2-day job.
Whew. Back to school, baby.
Yep.
I remember on Queen Street last year, just saw all the signs out in the stores. Back to bongs. Was it bong back to school deals that they had on, and had all these bongs out in the front around U of T, and I was just like, yep, that's a sign of the times.
Yeah. Okay, get to work, guys. Talk to you later.
Thanks, Bruce.
Talk to you later, Bruce. Thanks for having me. Thanks for being on.
What's up, everyone? So what'd you think of the interview? Are there any more questions you want us to ask that you want to learn more of? Then leave a comment below and let us know what you think. As usual, share this video with your network, smash that like button, and most importantly, subscribe to our channel because we would not be here without you. Thanks for watching, everyone.